Brent, I want to start with Amazon, also plunging almost 8% today on the back of results from yesterday. Of course, Amazon saw a shrinking profit, warned about a coming potential quarterly loss. Amazon has always had slim margins and has been, certainly the most visible tech company in the pandemic, for better or for worse. What's your take on why analysts are so sour now?
Hi, Emily. The stock had a huge run going into this, and the expectations were just at a point where Amazon could not deliver through. The top line was great, but the bottom line was not. When you hire 175,000 employees, it is expensive, right? And there's no tech efficiency that they can gain out of the gate. So it really revolved around the second quarter guide on the expense side. That's really what investors honed in on. And I think, as they said, they're heavily constrained. Their shipping costs disclosed in their filing today was up 41% year over year, and their gross merchant value was 27. So costs are rising faster than the volume of products sold. So I think you look at that imbalance, that will clearly balance out over time as they get some of the inventory back in. But we think short term, it's just a combination of a big run plus the expense, and really that's it. Everything else was good. Amazon, Prime, you look at the ad business actually accelerated while Google, Facebook, and Twitter all decelerated. So, a lot of bright spots, but again, stock largely reflecting a lot of moves.
We'll talk about Google and Facebook, but first, Jeff Bezos, the CEO of Amazon, being called to testify before a House panel on antitrust issues and concerns about how Amazon is treating third-party sellers. How much of a concern is this?
I think it's a big concern, but I think it's not really anything else that we haven't seen. So we've drawn the analogy. Salesforce.com had an app ecosystem where they let partners put their apps on a platform, and over time, Salesforce.com effectively started competing with some of those partners. And I think the same thing is happening in some sense in the software and in Amazon's business. There's select products that they will prove that they will actually produce themselves and expand into new categories. And some of the partners will feel that their toes are being stepped on. And so I think ultimately this is something we've seen in other tech companies, and we think that this is going to be an ongoing issue going forward.
Let's talk a little bit about Google and Facebook. Obviously, both of them depend on online advertising. The ad industry certainly going into a contraction period. Facebook said they saw a steep decline, but that things have been stabilizing in April. Alphabet's numbers probably weren't as bad as some thought they could be, but it's really the current quarter that we're all concerned about, where we'll see a fuller impact from this pandemic. I mean, what are you expecting for the current quarter in terms of just how badly the ad industry is going to be hit and how badly that in turn hits Facebook and Google?
The June quarter is going to be bad, no question, right? You look at Facebook, they said they saw an even pullback among large enterprise and small businesses. They've seen a flat year-over-year growth rate. So, things haven't gotten terrible in a decline. You're seeing a decline at Google and Twitter and others. But I think ultimately June's going to be a really, really tough quarter. It's going to have a bigger impact to Twitter because they do more brand than direct response, and brand is really hit. So Twitter's the worst off. We think Facebook is actually the best off, and Google is somewhere in the middle if we had to kind of frame it. Ultimately, I think the one thing that's binding this all together as we've worked from home is the internet, right? The eyeballs are there, and the old CEO of AOL said this very well. We're going to see the highest usage of actual media in our life, but the lowest advertising rates. And that's because advertisers are in a spin, right? Companies are not spending a lot of money on advertising as they try to figure out their business. And so it really goes back to the shape of the virus. If we can get this under control and get more confidence built, you're going to see ad dollars come back. But, we believe Twitter will be the last one to see ad dollars come back. Facebook, to us, is the most insulated. And then you have, Google and Snap somewhere in between.
So what makes you think that Facebook is in a better position than Google?
Well, just the numbers right now, right? Google saw, again, in late March, a mid-teen decline. Facebook said things were flat. So just if you look at the pure numbers in the magnitude of the downfall, that's just the numbers that they've given. So if you just measure it by numbers, number one. Number two, clearly Facebook's smaller than Google. Number three, Facebook has, in our opinion, a lot of communities that are on there. A lot of people are spending money to be seeing direct responses really high right now. When you look at Instagram, is doing very, very well on advertiser ROI. Around commerce is extremely high. So Facebook on Instagram, and anyone that's been on Instagram that's bought anything knows what I'm talking about. You end up buying things you don't really feel like you need because you see a picture and you sell through and you click through. That ROI is so big for the advertisers we speak to that sell, sweatpants or stay-at-home gear. So that we think ultimately, again, no one's immune. We think they're all at risk. We do think, again, we have confidence in a $10 earning number for Facebook, and again, a low 20 multiple gets you to higher levels on the stock. But no one's going to be immune out of this.